Before a trader finally detonates their account, before that single, catastrophic decision erases months, sometimes years, of careful progress, a silent fracture occurs deep inside the mind. It is never bad luck in the conventional sense. It is not merely the market deciding to punish them. It is the precise moment when the trader, without any external coercion, becomes their own most sophisticated and relentless adversary. They lay an invisible minefield for themselves long before their finger ever hovers over the execute button. Before we continue, make this commitment. This channel isn't about quick fixes, it's about developing traders with mental strength and discipline. If that resonates with you, join us. Subscribe now so you don't miss any of our upcoming videos. Stay until the end and keep progressing with us, one mindset shift at a time. This video isn't just another trading video, it's a mirror for your mindset. Like now, comment what resonates, and stay until the end. Because one idea here could change how you think, and how you trade. Let's go. Most people imagine self-sabotage as one explosive, reckless trade, an all-in revenge position, a martingale after a drawdown, fuck it moment. That is the Hollywood version. The truth is far more insidious. Self-sabotage begins the instant a trader permits two fundamentally incompatible realities to bleed into each other, the cold, indifferent reality of the market and the warm, emotional, need-driven reality of their personal life. The market does not know you have rent due next week. It does not care that your spouse questioned your career choice this morning. It does not register that you have been red for 7 straight days and desperately need this one trade to get back to even. But your brain knows all of those things. And when the part of your brain responsible for deploying capital begins taking orders from the part of your brain that is terrified, humiliated, euphoric, or desperate for validation, the war is already over. You have lost before the position is even opened. This is the hidden birthplace of self-sabotage, not in the trade itself, but in the psychological state you occupy when you decide the trade is worth taking. Most traders comfort themselves with technical postmortems. My stop was too tight. I misread the level. I should have waited for the retest. These explanations feel clean. They preserve the ego. They keep the blame outside the self. Yet if you strip away the comforting layers of chart analysis, you almost always discover something far more uncomfortable. The trader already knew the correct action. They simply chose not to take it. That is not a failure of strategy. That is a victory of emotion over reason. The human brain evolved to minimize pain and maximize pleasure. Financial markets are the most exquisite torture device ever invented for both instincts. A losing streak creates pain, the brain screams, do something, anything, to make the pain stop. A winning streak creates pleasure, the brain whispers, more. You're invincible. The rules don't apply right now. In both cases the destination is identical, deviation from the trading plan. This is why the single most dangerous moment in any trader's day is not when they are losing. It is when they feel anything intensely, rage after a stop hunt, euphoria after a 5 or winner, panic after a news spike. In that emotionally charged state, the mind is no longer reading price action. It is negotiating with it. It is bargaining. It is trying to force the market to deliver an emotional outcome rather than executing a probabilistic edge. Picture this scene, because it happens thousands of times every day around the world. You have been chopped up all morning. Frustration is boiling. You see a setup that is 70% of your criteria, close enough, you tell yourself. You enter. You are not trading the chart anymore. You are trading the feeling. You are trying to punish the market for the earlier losses. Or you are trying to prove that you are not, in fact, an idiot. The moment you click, buy, or sell, for emotional reasons, you have begun training your neurology to ignore its own rules. The next violation will require less justification. The one after that will feel automatic. You have initiated a feedback loop of self-destruction. The mirror image is equally lethal. You just booked your largest winner of the month. Dopamine floods the system. You feel superhuman. Another setup appears. It is not perfect, but you are certain the magic is still with you today. You double the size, because this is how wealth is made. You are no longer following a plan. You are chasing a feeling. The emotional polarity is opposite, but the psychological mechanism is identical. The darkest revelation of trading psychology is this: you can be intellectually aware of every word I just wrote and still commit the same crimes tomorrow. Self-sabotage is not rooted in ignorance. It is rooted in a chasm between what you consciously know and what you unconsciously do. The wider that gap, the more lethal you become to your own capital. Why does the gap exist? Because the mind is not a single unified entity. There is the conscious mind, the one that backtested the strategy, wrote the trading plan, and can recite risk management rules in its sleep. And then there is the unconscious mind, the ancient operating system that stores your deepest fears, your unspoken beliefs about money, your childhood impressions of success and failure, your need to feel in control, your terror of looking stupid. When the unconscious decides it needs something, to recoup a loss, to prove you are right, to restore a sense of safety, it does not send a memo to the conscious mind. It simply hijacks the controls. And here is the part almost no one talks about: the unconscious communicates through emotion, not logic. You can feel 100% logically convinced that your next trade is rational when, in reality, you are merely rationalizing a visceral impulse. This is why traders swear on their lives they will never do it again, only to repeat the exact pattern the following week. They attempt to solve an emotional problem with intellectual tools, new indicators, stricter rules, better charting software, while the emotional trigger remains untouched. The sabotage simply shapeshifts. There is another layer that feeds the beast: identity. If, at the deepest level, you do not yet believe you are the kind of person who can be consistently profitable, if part of you still sees yourself as the hard-luck trader who always snatches defeat from the jaws of victory, then your unconscious will manufacture circumstances to keep that self-image intact. Human beings possess a ferocious drive for self-consistency. We would rather be right about our limitations than wrong about our potential. A trader who unconsciously believes, "I always mess it up at the last minute," will unconsciously engineer a last-minute mess-up, not because they want to lose, but because losing confirms who they believe themselves to be. This is how the spiral tightens. One emotionally driven mistake reinforces the negative self-belief. The reinforced belief makes the next emotional mistake more likely. Over months and years, losing becomes the trader's default operating system, not because the market defeated them, but because they trained themselves to expect and accept defeat. The most brutal truth. In the moment, every act of self-sabotage feels perfectly justified. Every rule violation feels like an intelligent adaptation. You never feel the rust forming. You only notice the hull breach after the ship is already sinking. So how do you stop it? Awareness is necessary but insufficient. You cannot simply catch yourself in the act and expect permanent change. You must deliberately interrupt the neurological loop the instant you detect an emotional spike. That means developing the muscle of walking away when every cell in your body screams to take the trade. It means proving to your unconscious, through repeated, deliberate action, that you are capable of choosing discipline over impulse. That is the only language the unconscious respects: consistent behavioral evidence. And here is the part most traders refuse to accept: fixing your psychology often feels like removing the very thing that made trading exciting in the first place. If you secretly love the adrenaline, the heroic narrative of battling the market, the dopamine rush of being in the zone, then true consistency will feel boring, even depressing. Many traders would rather lose money than lose the emotional roller coaster. They are not just trading for profit. They are addicted to the feeling of trading. That addiction is why 90% plus of retail traders remain permanently stuck. The majority of traders believe the enemy is external: stop hunting algos, unexpected news, fake-outs, whale manipulation. The truth is far more confronting. The real enemy does not appear on any chart. It lives between your ears, whispering justifications, amplifying fear, inflating confidence, and quietly steering you toward the same familiar outcomes. Self-sabotage rarely announces itself with trumpets. More often it is slow, corrosive rust. You can possess encyclopedic technical knowledge and still undermine yourself in ways that feel, in real time, like prudence. You move your stop-loss, to give the trade room to breathe, when the truth is you cannot tolerate being wrong. You cut winners early because the thought of giving profits back is unbearable, even though your edge requires runners. You chase the very next candle after missing the perfect entry because sitting on your hands would mean admitting you are not in control. These are not accidents. These are micro-betrayals of your own system. Individually they seem trivial. Collectively they are lethal. Perhaps the most treacherous aspect of self-sabotage is that the brain often performs it under the banner of protection. Your primitive neurology is not trying to bankrupt you. It is trying to keep you alive. And, alive, to the limbic system, means familiar. If your historical norm is break-even or slow bleed, consistent profitability represents unknown territory, danger. The moment you begin building real momentum, the ancient brain floods you with doubt, restlessness, and reckless impulses designed to yank you back to the familiar baseline. This is why most blow-ups do not occur during losing streaks. They occur immediately after the best winning streaks, when the account balance finally looks unfamiliarly large. Success that contradicts your identity feels undeserved, fragile, temporary. The subconscious panics and engineers a return to equilibrium. You over-leverage, because this is how the big accounts are built. You ignore stops because the old rules don't apply at this level. You take random trades out of boredom because calm consistency feels wrong. The market does not take the money back. You hand it over. The mind also plays selective amnesia. Losses are seared into memory with excruciating detail. Wins are minimized, attributed to luck, or quickly forgotten so they never become part of your identity. If winning never feels like who you are, it will always feel precarious, and your unconscious will never grant permission to protect it. Rewiring this requires something far more difficult than learning another candlestick pattern. You must accumulate reference experiences of calm, controlled, consistent profitability until they become as ordinary as breathing. You must prove to your neurology, through hundreds of small, boring, rule-based trades, that success is safe, that being wrong does not equal personal failure, that money can be kept without cosmic punishment. Only repeated, lived evidence, not affirmations, not journaling, not positive thinking, rewires the ancient operating system. This process is slow, unglamorous, and deeply uncomfortable. Most traders abandon it the moment the initial thrill wears off. They return to chasing the next holy grail strategy because confronting the self is infinitely harder than confronting the chart. There are subtler, quieter forms of self-sabotage that never trigger the obvious alarms. Mental rehearsal of failure disguised as preparation, addiction to chaos disguised as adaptability, endless over-preparation disguised as diligence, fear of success disguised as humility, loyalty to outdated methods or gurus disguised as respect, narrative protection. I'm still learning, I need more screen time, the strategy just needs one more tweak, disguised as patience. These are the slow cancers that turn talented, hard-working traders into permanent break-even artists. No single decision is dramatic enough to force reflection, so the erosion continues unnoticed for years. At its core, self-sabotage is the mind's attempt to maintain homeostasis. If your internal financial thermostat is set to struggle, any temperature above that will trigger compensatory errors until balance is restored. Those errors feel like bad luck, but they are precision-guided. By programming that often predates your trading career, lessons about money absorbed before you were 10 years old. The only escape is to detach your identity from your P&L. The best traders do not use the market to prove they are smart, worthy, or in control. They use the market to express a process. Losses sting, but they do not threaten the self. Wins feel good, but they do not inflate the ego. This emotional flatness is what outsiders mistake for coldness. In reality, it is freedom. When you finally dismantle self-sabotage, trading becomes profoundly boring. The drama evaporates. The emotional highs and lows fade into background noise. You no longer need the market to feel alive. You simply execute, collect, and repeat. And paradoxically, that is the precise moment consistent profitability becomes inevitable. The ultimate irony, the same psychological game that can keep you broke forever is the only game that actually determines whether you ever get rich. The market itself is neutral. It is your own mind that decides the outcome, one quiet, invisible decision at a time. If you have read this far, you are already in the top few percent, because you are willing to look at the part of trading no one wants to discuss. The question is no longer whether you understand the problem. The question is whether you are willing to do the long, uncomfortable, ego-dissolving work required to become someone for whom winning is simply normal.